3 stocks to buy in June, kind of. Because in my humble but professional opinion, stock picks don't really matter that much. What matters way more is your actual investment process. So that's why in these videos we go over the process of how I've managed my account. And we're going to talk about another really important concept too, which is how to add money to your account. That actually becomes a big part of trade management because your position sizes are going to change depending on when you're adding in new money, which you should be doing as often as you can. And if you don't know already, the way I trade is with a system. I use a momentum system called the Nasdaq All Stars. And what the Nasdaq All Stars does is that it ranks all the stocks in the Nasdaq 100 by momentum. And then I invest in the top 5 stocks that have the highest momentum. And as that changes, each month I rotate into the highest momentum movers. If you want to learn more about that system, click this link right up here. It'll take you to a video that explains everything you need to know. But okay, let's jump into it. First stock, if you guys remember from previous videos, is Workday. It's that same worst stock in the world, but right now it is pretty good. So on December 3rd, back here, the system gave a signal telling me and all the Fallible members that Workday was ready to go. So I got in here, and since then it has gone up over 23%. Now the last time we looked at Workday, it was ranked number 7 on the TSI chart. But now, as you can see, it has moved to number 4. So we are most likely going to stay in this stock going into June when our rotation happens. And TSI stands for Trend Strength Indicator. So this is the measurement we use to rank stocks by their momentum. The higher the TSI number, the higher up on the list it is. So based on Workday's TSI number, which is 16.6, it is at number 4. And basically what the TSI does is it measures absolute momentum and relative momentum and combines them to just give you a flat out number. And based on that number, you could rank stocks by how much momentum they have. And the whole idea is that you want to be in stocks with strong momentum because they're going to be moving up. So because Workday still has a high TSI number, is ranked highly on this list, we're going to continue to hold on to our position. And here's what I really liked about Workday. It has held up so strongly during this crazy market. And the market has gotten a little rough lately, right? Since highs, we are now down over 7.5%. Just today, as of this recording, this is a Thursday, Nasdaq is down almost 2%. So the market started getting a little more volatile May 3rd when all those Trump tweets started coming out. But if you look at Workday from May 3rd, it did take a bit of a hit, but then it rocketed back higher. So in Workday, since May 3rd, we are up almost 1%. And in the Nasdaq, as I said, we are down over 7%. So Workday has been doing 8% better than the market over this period. And that's a really good sign, because the downside of momentum is just like when they go up faster than the market, a lot of times they fall a lot harder than the market too. And the reason you make money over time is because you have your risk control in place. So you cut off that tail end and you don't lose that money as the stock is dropping. Now, when you see a high momentum stock like Workday, remember it's number 4 in that TSI list, 4th highest momentum in the Nasdaq. When you see it hold up like this when the market is falling, that's very impressive, because that's telling you there is a lot of buying pressure, and everyone holding that stock, they are strong hands. What you got to worry about when you're investing in a stock is the weak hands. So when the market gets a little shaky, everyone starts selling. That's not good. When you have a momentum stock holding up like this during a market rout, it increases the probability greatly that when the market turns around, this stock is going to take off. Because think about it, if it's actually going up while the market is going lower, think about what it's going to do when the market is actually working in its favor. This is a great sign to see, and if you're a discretionary trader trading momentum, it might even be a good time to add, but we'll talk about that in a little bit. Earnings on Workday are coming up pretty soon, Tuesday, May 28th. We'll see what happens with those earnings. I'm a little confident in them that they'll turn out good because the stock price has done so well up until this point. That's usually an indicator that it's going to continue to do well through earnings. Like I said, there's strong hands holding on, but nothing's for sure. It could tank 20% right after earnings. That happens too. We'll see. Next stock is Mercadolibre, Meli. This one we got in March 1st right here, and since then it has moved up over 24%, almost 25%. And Meli right now is the strongest stock in the Nasdaq. Look at its TSI rating of almost 29. That's 10 higher than the next ranked stock, Align. And Meli has actually stayed number 1 on this list for months in a row now. And you can just see by the chart how well it's doing. And you can also see that just like Workday, it has held up pretty well during this market rout. In Meli's case, they had earnings May 2nd, which turned out really well, and the thing jumped over 21% right there, and that coincided with the market kind of turning right around that time too. But instead of going lower to close that gap, Meli has just stayed higher, even increased a bit. So Meli is another stock that I'm excited for. I want to see how it does when the market finally turns around again. It should also explode, and it is also another good candidate to add some money to, which again we'll talk about in a second. But Workday and Meli, those are my top 2 picks right now. really strong for them to hold up during this. Now, a position that did not hold up so well is Qualcomm. Oh my God. We entered this guy on May 1st right here, and since then it has dropped almost 23%. Rough. Not only did this company suffer from the trade wars and the fear about that, but the really big drop right here came when the courts ruled against them for being anti-competitive. So yeah, I was invested in this because it was a high momentum stock before all this stuff happened. You can see by the chart it was looking pretty good, but the stuff did happen and it got crushed. And that's why position sizing becomes so important. Because we sized correctly in this name and it was only a portion of our portfolio, we weren't hurt as bad. And the second thing that saved us is risk control. Now, when Qualcomm opened up this low, yeah, it basically jumped our stop. So as soon as we saw that, we exited, which was yesterday as of this recording, which was good because today it's down another 4%. And the thing is, normally what happens after a big drop like that, you get a bit of a rebound. The thing consolidates a bit before it drops lower. So I can see some discretionary traders maybe waiting for that rebound before exiting. But that's why it's just much better to always stick to your plan and your stops. Because look what actually happened, it's dropping even more, and it might drop even more tomorrow. So yeah, we took a bigger loss than we wanted on this position, but we still cut it off as soon as we could. And because we were sized properly, even if the loss was bigger than we predicted, we're still okay. Our portfolio isn't destroyed. It's just fine, really. And it's funny because I was just talking about Qualcomm when I released that market review video, and I think the price was right here. And in that video, I was saying, you know what, if you're a discretionary trader and you know what's happening with these trade wars, and you knew what happened with Huawei pushing all their orders forward, maybe you should get out of Qualcomm now. But I said, I'm not gonna touch it because it goes against my system. So I didn't touch it. And then of course, the very next day when I actually published that video, it crashed. But that's what happens. I'm not mad about it because I still stuck to my system. So my win or loss isn't dependent on what the stock price actually did, but it's dependent on whether I followed my system or not. That's the way you need to think about these things. Because in this particular case, okay, if I got out early, I would have saved some money. But over the full cycle in the long term, if you don't follow your system and you break your rules and you get out early, it's gonna hurt you. And it's gonna hurt you a lot more than this one-time short-term loss. Now, what's been interesting during this market route and with all these stocks going a little wild is that I've actually had a decent chunk of money that I wanted to add into my investment account. Now, this addition was gonna be sizable. And you know when's the last time I made an addition of this size? Back here, February 2018, right before things started getting crazy. And I mean, I made additions between then and now, but they haven't been as significant. Now, when I added back in February, I was like, screw it, I'm just gonna throw it in there because I'm long-term. Where I get in shouldn't matter as much. And that statement is true. If you're following your system properly and you are thinking over the long term, where you're adding your money into the account shouldn't hurt you too bad over all these years. But in the short term, it could kind of hurt. Because last time I literally added right here on this green bar, January 26th. And right after I added, we had all the volatility in the world. And it was rough because I had this whole portion of new money that I added at basically the top, which just collapsed after I added it. And it sucked because for that portion of money, it took me a long time to finally break even on it again, which, like I said, is fine over the long term, but over the short term kind of sucks. And here's the thing with adding money to your account. It's kind of discretionary, at least for my system. But as I'm about to show you, you can make it systematized too, at least a little bit. So this time, once again, right around here is where I had the money to add to my account. And right around here is where I had that same feeling as last February, like things are a little overextended. I don't necessarily want to add all that money right here. So I talked to Tyler about it, you know, my partner from Macro Ops, way smarter than me. I was asking him what is really the best method. So he started explaining about the edge of the system, the Nasdaq All Stars. It's betting that the market is going to continue to move up, right? So depending on where you add money in, based on where the market is at, you're going to have different levels of edge. So if I added up here, I would still have some edge in that adding process because we're still betting that the market is moving up. But if I add my money when the thing is in a correction, like right now, you have even more edge because it's like you're averaging down. But if you believe in your system and you believe that the probability of the market going up is higher than the market going down, then there's a chance that you're going to make more money when you're adding it when the prices are lower. So Tyler has a lot of experience trading the S&Ps, and he's very good in the last 30 minutes of the day shorting the thing and understanding how low it's going to go, when it's going to stop, when it's going to rebound. He has a really good feel for the tape. So that's why when he's adding to his strategies, he waits for these big down days and adds at the bottom, at least in his long strategies, because he understands understands that when the market rebounds like he thinks it will, he's going to make more money than if he added at the top. Now, of course, my question to Tyler was, how do I know I should be adding, say, on this big down candle? How do I know it's going to stop right there and rebound? How do I know it's not going to do like what it just did, rebounded and then start heading lower again? Like, look at this price action before. This is how a downtrend works, up and down and then lower lows and lower highs too. What if I'm adding and it turns into a market crash? Then that was just stupid. And Tyler's like, yeah, that's always a possibility. But if you're in a long strategy and you're betting that the market is going to go up, then you got to keep taking that bet. And realistically, how often is the market crashing and going lower compared to it going higher? Not adding when the market is going lower is kind of a lower probability bet because you're almost betting on a crash, which is a low probability event. And what Tyler was suggesting was to add even more than you normally would on a really bad down day, because then you know you have even more potential to make profit. Now, I think that's a good idea for someone like Tyler, who's a little more in tune with the daily moves of the market. But for me, I was like, you know, I'm not about to do that because I don't feel comfortable enough to try and time it on that short of a time scale. Because you guys know I always say I'm the systems trader. I'm following my system. I'm not as discretionary anymore. So what I decided to do instead is just split that chunk of money that I wanted to add into 5 parts. And this is what Tyler recommended too. And then once a week, just add each one of those parts. And that way I don't have to time the market perfectly, but I also reduce my volatility. So I already made my first add from that chunk of money right around here. My second add, I'm probably going to make this Friday, where the market will be even lower, it's looking like so far. Now, when I added back in February of last year, I just put it all in at once and I got hit hard. But this time, like I said, I added right around here, right? And when I added that fifth of the chunk of money, I also added some into Qualcomm. So over the next few days when Qualcomm collapsed, I took a bit of a hit on that new money I put in. But I was thankful that it was only 1/5 of the total money I was planning to put in, which is exactly what Tyler was talking about, smooth out your volatility by breaking it up in chunks. So in some situations like Qualcomm, adding money to the stock actually hurt, right? But in other situations, like I was telling you about Melly and then Workday, I'm excited for what these two are going to do when the market turns around again, because they've been so strong. So if I'm adding money there, if those two stocks rocket off, that will likely more than cover any losses I had adding to losers. So I just systematized it for myself. Over the next 4 weeks, I will add the last 4 portions of that new chunk of money to my investment account. And I'm not trying to really time it or anything. If the market is going down, that's fine. And that's what I think makes sense for most investors, unless you're like Tyler. Just make a standardized plan and stick to it, because this is all short-term stuff. Over the long term, whatever you do, you should be okay, as long as your strategy is profitable, of course. But in my book, the simpler, the better. Now, if you have any questions, put them down below. And if you like videos like this, going over the actual process of investing, which is 90% of the game, stock picks are only 10%, then make sure you subscribe to this channel and hit that notification bell so you get an email notification when our next video comes out. We publish videos almost every single day, all about investing in business. So subscribe and I will see you in the next video. Stay fallible out there. Bye.